I absolutely think that, and we're already seeing the example of the tokenized equities. There already are a bunch of markets for them. They're not the most liquid markets now, but they will become more and more liquid. And so that will enable 24/7 trading of a lot of these assets.
And welcome to the Startup Innovators podcast, where we look at some of the hottest companies on the planet. And we've got one of those today. I've got Ian Weisberger in the house, who is the founder and CEO of CoinRoutes, coming to us today from Dubai. How you doing today, Ian?
Yeah, thanks for having me, Tim. It's great to be here.
That's great. What's 9 a.m. my time, 9 a.m. your time. Of course, we're in different parts of the world. One is light and one is dark. So that is the contrast. And so CoinRoutes is a very cool company. I'm very into and studying crypto. And this is for how I understand it as a layperson. I like to call it the GPS for institutional crypto trading. So if you're a hedge fund, a large institution, or a huge individual trader, AKA what we would call a whale, a market mover, and you're trying to, if you want to move a few million of Bitcoin today, you just can't go to Coinbase and hit send. There's a lot of implications of that. If you just do a buy order, you'd probably impact the market price for one, which you don't really want to do. You could get front run or even potentially destroy your own confidentiality, which is kind of the point for some of these whales operating off these crypto rails. So Ian built CoinRoutes to address that issue. So the company is an execution engine that can route massive orders across 60 exchanges, find the most optimal pricing and timing, and can do it, this is the key, without taking custody of your crypto. And today the platform's handled over 500 billion in trades, averaging about 40 billion transactions a month, and they just got a US patent on their smart ordering tech. And this is how the players are doing it today. So I hope I didn't botch that
Yeah.
too much, but as a layperson, that's kind of how I see it all happening.
Yeah, I mean that's pretty accurate. I mean, for like a really lay person, I'd probably say, oh, it's like the Kayak for crypto, whatever. You want to find the
Gotcha.
best price. But ultimately, what ends up happening is if you're placing a large trade, you need to do it intelligently. And on Bitcoin, that might be millions of dollars, but in crypto, we have a thing called shit coins. I don't know if you guys are familiar with that all here listening, but basically the smaller cap names, right? So these smaller cap names, in some cases, you're selling, tens of thousands of dollars of the thing, and it's going to move the market. So you need to be smart on how you trade it. It's really like the kind of the interactive brokers of crypto, so to say.
Very
dedicated for people that are trading crypto. Yeah.
Very cool. As a quick little bio, Ian started building tech at age 12. Yes, age 12, and I have a 12-year-old, so I know what that's all about. Can't get them off equipment. They don't want to spend too much time in school because they're building businesses and doing transactions on the side in seventh and eighth
My
grade.
teachers actually took my laptops at school, and so I had to hire tech support people. So I had experience running a 24/7 organization pretty early on, which was very relevant in crypto. As a 24/7 market.
That's absolutely hilarious. I could totally see that based on where you are today. So you co-founded the company in 2017 with this wild idea of giving institutions the ability to route crypto orders without giving up custody. And as I mentioned today, CoinRoutes is actually powering 3,600 spot and derivative instruments across 100 exchanges, including some of the big ones we know like Coinbase, Kraken, Binance, etc. And what an amazing story. To quote you from a LinkedIn post that I had read, you said, 7 years ago, I started CoinRoutes to do one thing really well, and that was execute. $500 billion. That's a $500 billion later. We've proven that part, and here we are today. Wow, that's absolutely amazing. Congratulations. And we're just starting.
Yeah, I remember when we were, No, I remember when we were sitting in this like windowless office, it was like two of us. And now I think we just hit over 60 now. I think we're 60, 62 now. So it's been cool to see the growth and, Yeah.
Yeah, well, I'd love to jump into the whole thing. I mean, why did you start the company? Obviously, you saw something broken in crypto trading that made you say, hey, this is some opportunity we can obviously address.
Yeah, absolutely. I mean, so in 2017, you saw $3,000 gaps between markets. So the price of Bitcoin would be $3,000 higher on Coinbase than it would be on Kraken, for instance, which is just
Yeah.
crazy. Like that doesn't happen now, and it usually doesn't happen in asset classes. It's completely not normal. But when that was happening, we kind of sat down and thought, okay, there should be a better solution for trading these instruments, right? How do you trade this effectively? And the market's definitely come a long way since 2017, sitting here today.
So you guys, in a way, are helping to stabilize the markets as well, as opposed to someone just going to one
Yeah.
exchange and make a huge purchase. And I've always wondered that, you always hear about, these big, the whales they just sold X amount, of millions of dollars of crypto. I've always wondered, how does that actually happen? And so when I really started to learn about CoinRoutes, I thought, wow, this just makes so much sense that you need a technology platform that allows you to buy or sell on different exchanges concurrently and have something similar or at least optimized in price. You can't have that issue you just talked about where it's selling for one price on one exchange is dramatic difference on another.
Yeah, I mean, that's actually a large part of our business today, you could say, is helping stabilize the price. We have a special algorithm, and without going into details, basically it buys something on one exchange and sells it on another rapidly to basically capture what we call the spread. It's called the spread algorithm. And so people using that sort of technology, previously it was only these large shops that had teams of developers that could actually go out and afford to deploy this. But we have pretty medium-sized traders that are one or two guys that are using this technology now and able to do stuff that previously only the largest shops would have. And so I think our technology is democratizing access to these sophisticated trading tools so that, either a small hedge fund or one guy with his, personal money can go and now access the same types of trading strategies that a large fund would previously have access to.
So, are you kind of the only company doing that, or where are the competitors, and how is what you're doing different?
Yeah, yeah. Look, I mean, we have a couple competitors. I actually looked up an interesting statistic. One of our competitors, I don't necessarily, want to go into the details, but basically we're growing. Our employee count on LinkedIn, I think, was up like 20% this year, according to them. I think in reality, it's actually a bit higher. We're growing, we're attracting clients, we have the best product. Some people are shrinking. There's one company that's growing that I don't, particularly know how well they're doing or whatever, but we're winning deals from them as well. We've definitely raised less money, I would say, than the competitors.
Yeah.
Um, but if you go out and talk to people in the market, I think we've been able to be remarkably efficient with the products that we've built, and so we're still winning large deals from our competitors.
Yeah. So are large institutions using this to buy and sell primarily? Is it large hedge funds primarily? Who are your target clients that are where you're getting the most traction from right now?
Yeah. Yeah. I think like as you grow a business, you have to figure out what's your addressable market? What's your TAM? How do you expand your TAM?
Yeah.
And you're always thinking, okay, like I was going after these, call it large institutions before. How do I actually scale this now? And so, yes, we have the large institutions as our core constituency, but over the last couple of years, we've also kind of gone down market a bit as
Hmm.
well. And so now we have individual traders, really small hedge funds. So we can service the whole market. And actually, by having the large institutions on one side, and the smaller firms on the other, we're actually able to kind of have network effects, and so it's
Hmm.
beneficial to both sides.
Very cool. And so walk me through real quickly how a transaction would work, because one of the big things that I think is kind of unique about is you're not taking custody of the crypto, so you're really providing the information for how they conduct these transactions without you touching
Mm,
the money at all. So how does that actually work? If we could walk through a typical type of trade.
yeah, yeah. So basically, what happens is you have the exchanges that you trade on, and you
Hmm.
link your account to CoinRoutes, and then we can basically do trades and transfers on your behalf for those linked accounts. One of the things that's become much more popular over the last couple months are these
Hmm.
decentralized exchanges,
Yeah.
which basically means that you can keep your own assets, right, and still trade. So you can keep assets in your own wallet or in your own custodian, and you don't necessarily have to trust this offshore exchange with your money. So Hyperliquid is a big exchange. We went from doing zero volume there to doing a couple billion a month in a
Wow.
very short time. And ultimately, a lot of these crypto trading venues are moving to be kind of more decentralized.
So if you're an individual and you're what you call a whale, would you be using the same type of
Mhm.
system as well to conduct trades? I don't want to impact the market too much. I also want to keep that my identity kind of quiet, so I don't want to have a large block on one exchange. Is that kind of typical where they'll go across 4, 5, 6, 10, 20 exchanges concurrently?
Yeah. Yeah. I mean, that's somewhat common. That is pretty common on the larger institution side. On the individual side, what ends up happening with these exchanges
Hmm.
is, there's four different exchanges that might list the same instrument, right, or more. The price
Yeah.
on one exchange will be higher and then it'll be lower. It does what's called mean reverting. So if you look at the chart, they kind of just circle around each other. So ultimately, even if you're trading on one exchange, having knowledge of what the other prices are on the exchange can actually help you get a better price in the long term,
Oh, wow.
because what you're doing is you're actually basically the algorithm is smart enough to know, okay, break it up into slices and piece it out into the market. And so you're going to end up getting a better price. And that's what a lot of our clients are doing.
What happens, like we've seen in the past couple of weeks, where you have this incredible crypto market where things are either going one direction or they're crashing in the other,
Mm,
and these exchanges are overloaded. How does that work, and how does CoinRoutes come into play to try to maybe stabilize or manage that a little bit?
yeah.
Keep the
Yeah.
keep
I
the
mean,
chaos
this
from
was
becoming,
bad.
yeah.
Yeah. This last couple days was bad, but there was, I think, what they called Black Friday. It was October 10th when like
Yeah.
Binance blew up and like it was all over the news. It was really, really bad. But we actually noticed that the exchanges were going down before they publicly admitted it.
Oh,
And we were able to get our clients to basically warn them and be like, hey, you guys need to close whatever you're doing right now because this thing is
oh,
going to
wow.
fall all over at some point. And so we were kind of very much in the trenches on that event. I mean, the drift down to 90K has been bad, but it hasn't been like flash crash like what happened last month, where
Yeah.
exchanges just had major issues. So that does happen in this market.
So that's kind of a big selling point, actually, to be a client of CoinRoutes, right? I mean, if you're able to say, "Hey, we're seeing patterns out there because we're taking a look at all these different exchanges. There's a consistency," and you're able to go back and say, "Given this, we're going to share that information with you." I mean, to me, that would seem like a pretty big sales pitch to be on the platform, wouldn't
Yeah.
it?
Yeah. I mean, it's definitely important to have your kind of like execution partner when you're trading in this market. It's still pretty nascent in terms of like it doesn't have the just rules and regulations and whatever that equities have. I don't think it ever will because it's such a global
Mhm.
market. It's hard
Yeah.
for one body to just control it. But every exchange has a different rule book basically, and so you need help navigating that, right?
Yeah. I think a lot of this comparison between the way like an ETF trades, basically following the pattern of a normal stock where it's, 5 days a week, it closes, East Coast closes at
Hmm.
whatever, 3 o'clock
Yeah.
in the afternoon type of thing. I can see looking at the kind of the exchange volume, which is, like I said, running 24 hours a day, 7 days a week, seeing those
Mm,
patterns, and then certain individuals being able to make decisions, like say on a Sunday night with that information, knowing that when the information filters out Monday morning and the regular, like ETF trading begins, being able to manage that
mm.
pretty effectively. It's kind of like it's legal inside information in a way. It's just bringing information that's out there available, but some people have the ability to execute off that information, and while other people can't because they're stuck in this model where they're only trading 5 days a week.
Yeah.
Do you see? Yeah,
I think that's an interesting point, and I honestly,
yeah,
a lot of people in the industry, as well as myself, believe that ultimately all these stocks are going to be trading 24/7, and we're already starting to see that. So I don't really know how people that are kind of only able to trade on these legacy systems that need daily shutdown periods and can't even do 24/5, like how they're going to keep up, right? Because ultimately, a lot of these stocks are going to be traded 24/7 at some point. Like there already are certain markets where that's happening.
hmm,
um, for now, the trading costs on the weekends are going to be very high, but at some point you're
yeah,
going to see a very liquid market for Nvidia on the weekends. I think that will happen like over the
yeah.
next couple of years. Even there's already a plan. There's already an exchange that's doing it. It's not super liquid. It's whatever, but at some point in sooner than people think that will be the case.
What's your view on tokenization as a whole? There's a lot of people that believe we're moving to this era where everything is going to be tokenized and everything is going to be tradable, whether it's art, whether it's limited partnerships and private equity, whether it's just a private company decides to create tokens rather as a form of going out into the market and raising capital. Kind of what's your overall view of this globally over the next 10 years, and how will you play within that marketplace, if at all?
Yeah, I absolutely think that, and we're already seeing the example of the tokenized equities. There already are a bunch of markets for them. They're not the most liquid markets now, but they will become more and more liquid. And so that will enable 24/7 trading of a lot of these assets. I wouldn't underestimate the power of the established companies to do what's in their best interest. And so I don't think that everything's going to be on this tokenization, and because like ultimately the existing players are gonna remain, right? Like that
Yeah,
we work with them. Like they're not going anywhere. And so the idea that these new crypto companies are going to come in and take the whole market, I think is a bit ridiculous. But no, I do. I mean, if you look at what JP Morgan is doing with JP Morgan coin, and
yeah,
there's tokenized stocks trading on the NASDAQ, like you'll see like these legacy players and the crypto players kind of converge. I think that's what's happening. I don't think, the system is really getting totally rebuilt. But they are converging for sure.
yeah. What do you think about tokenized gold?
Um,
Any views on that?
yeah, I mean, I keep seeing it. Yeah, yeah. I mean, it's interesting, right? There's a couple of them. I think like what is it, Tether and Paxos, and I see the market
Yeah,
cap climbing steadily. So definitely, it's a good thing because it's another collateral asset that can be used. So in
yeah,
crypto, the reason for a lot of these tokens to even exist is so that people can put them on these protocols where they can borrow against them, and they can use it as
yeah,
for trading leverage and all these kind of crazy convoluted financial structured products that they can do with them. And it's another collateral asset that isn't linked to the dollar. So I think it'll generally encourage adoption. I think I saw something interesting on LinkedIn actually, that the ratio of gold to Bitcoin was actually at its peak in 2021. And even at the previous peak, when Bitcoin was at 125K, it was still below what it was. I think it used to be 8%. Bitcoin was 8% of
yeah,
gold at the peak in 21, and now it's 6. It was 6, now it's lower,
yeah.
which I think
Wow.
is an interesting signal. Yeah.
Yeah, I don't
So
know, because people that talk about gold all the time as being this great, this great asset, but it is still a physical asset. Who wants to really custody gold? You got leave it with a third party institution who's custodying for you. You have to have trust in that, or
right.
you could have it sitting in your house and you can't let anybody know because someone's going to
Yeah.
knock on your door at midnight. But this idea of providing some of the characteristics that we would see in crypto or Bitcoin in terms of moving markets internationally, high frequency trading, all these things that through tokenization, that could be something that would get us closer to a Bitcoin. Although obviously Bitcoin's fixed at a certain number, and gold keeps on, you can mine more gold every year. So I find that an interesting discussion. I even went at one point and went to Grok and said, did analysis between Bitcoin and tokenized gold to really understand like what were all the benefits, how close could it get to some of the characteristics of Bitcoin. And
Mm.
I see that personally as something that would evolve as a market structure one day for so that people to buy and sell gold very easily.
Yeah, I mean, absolutely. And one of the, I mean, the historical use case of gold was you could have gold in a vault and then you could borrow cash against, like you could
Yeah,
basically get
right.
paper in and out, and you could use it as collateral for loans. Like if you were a farmer or whatever, like you were able to
Yeah,
do that. And now pretty much people who own gold, they buy an ETF, and maybe they can borrow cash against it from their broker, but it's kind of a roundabout way to do it. And this seems a bit
yeah.
better to me, to, having Paxos Gold and depositing it to a lending protocol. Like it seems like a decent use case.
Yeah, I think that's a great point too, is using it as collateral for lending, which is going to be a big issue for Bitcoin as well. All these people want to buy and hodl Bitcoin, and let's say 10, 15 years down
Mm.
the road, it's worth a lot, but it's not really generating interest. I think right now a lot of people are concerned about lending their Bitcoin out, let's say, right? You should get a certain interest rate, whether
Yeah.
the party on the other side is going to be
They,
able to pay you back, or they're going to go BK or not. And so using it ultimately to collateralize, to borrow in dollars against for a mortgage or something like that. That's going to be something it's definitely going to have to evolve.
So I can't say who it is, but a major bank, actually, a rep at a major bank texted me and said, "Hey, dude, do you want to borrow cash against Bitcoin?" And so that is happening. I think that will change because I had friends of mine, that had deposited Bitcoin in Celsius and BlockFi
Yeah.
and all of those other since bankrupted lending companies. And it's funny because the lending business in crypto has been a bit anemic. since all that, and now that function is basically going to get taken on by the big banks who are not going to, they're too big to fail. Let's be honest. They're not going to run away with your Bitcoin, right? They have too big of a legacy business
Right.
to do that. So I think that is getting fixed, and it'll be interesting to see how that evolves.
Yeah, that would be super exciting. Like you said, if a large U.S. financial institution said, "Hey, we'll collateralize
Yeah.
a loan based on your Bitcoin holdings," that's going to create a massive market for a lot of things in the United States. I think, including mortgages. The down payment on the house, all those different issues. So exciting things to come down the future for sure. Tell me a little bit about perpetual derivative contracts, how much of those you're involved with, and what's your overall
Yeah.
view of that, particularly the perpetual side of it is being, let's say, more risky. A lot of people don't understand it. Let's get kind of the high school perspective on it at that level.
Yeah. I mean, look, it's a bit complicated for someone who hasn't traded them, but basically a basic futures contract is, what is regulated by the CFTC, and it's been in existence since I think the 1700s, if not 1800s. For basically, they were
Yeah,
invented because of farmers, and they wanted a way to, figure out, okay, if I have this crop and it's going to be done in whatever September, I want to pre-sell that, right? So I want to
right.
sell my thing now, but in the future, right? So a future contract is the ability to buy or sell a certain number of goods at a point in the future, right? So up until perpetual futures were invented on BitMEX, basically, there was always a date of expiry, and
Hmm.
so
Right.
typically it would be, it would trade above the current price, and that would be the rolling cost, and so on and so forth. But with the perpetual future, it doesn't actually expire, and
Mm.
so the mechanism by which it tracks the underlying price of the actual asset is basically whoever is long the asset pays the short, or vice versa. So there's a funding mechanism. And
Hmm.
now the problem with all this is in, times of extreme market stress, the system just gets out of whack. And so that's what
Yeah.
happens on October 10th. People who were short, who had sold short instruments, who had, let's say they sold Bitcoin short, the thing crashed to 102, but they actually got stopped out at 110 or 107. And so they didn't actually get the full benefit. They should have made a lot more money than they did. And the reason why that happened is because the longs were just wiped out. Like there was not enough money in the system in order to support it. So it's a pretty complicated thing under the hood, but if you're just trading it, it looks like you're just buying or selling the underlying. It looks
Yeah.
like you're just buying or selling Bitcoin, when in reality, you're buying or selling this derivatives contract.
Sure. Why would you do a perpetual future contract? Because the risk that you just mentioned, for example, you've got to be watching it every single second because it's always there, and you could get, you said, stopped out at any moment.
Because if you trade it with a reasonable amount of leverage, it's easier than, like, if you have a normal future contract, then you have to constantly, a different risk, but your risk is that the price gets way out of whack,
Yeah.
and it settles at a bad price, and you have to roll it. So you constantly have to sell the expiring thing and buy a longer dated one. It's called the rolls. You have to constantly roll
Yeah.
them. So in a way, you
Right.
also have to. So it's actually less work for a retail investor. If you're trading at 2x leverage, even in this case, you would have. So if you bought, $200,000 worth of Bitcoin with $100,000 in cash, you actually would be fine. It didn't crash that
Yeah.
much. Um, but the reason is typically capital efficiency. So it's so that people can speculate, right, long and short on an asset without actually having to borrow the underlying asset.
Has that has that become kind of a huge part of your business?
Yeah, I mean, it's the vast majority of most crypto exchanges business, and it's, the vast majority of our business is people buying and selling the futures contracts, and then
Yeah.
basically selling futures, buying the underlying, and vice versa, and flipping between the derivative contract and the actual underlying. And it's a way for people to make yield. So you can make,
Yeah.
around 15% relatively risk-free by, buying Bitcoin and then selling the future and then collecting the
Right.
funding rate and then moving that position around. So it's a pretty big business in crypto
Are you finding
today.
like large hedge funds? That's kind of where their game is primarily, using that leverage, buying futures
Um,
contracts, and then doing it that way.
Yeah, we call it that's the market neutral. That's the market neutral strategy, is when you're basically buying and selling futures and you're trying to
Mhm.
not have exposure to the price direction.
Right.
And so unless the thing moves just a huge amount, like it did on October 10th, you don't really have price risk. Obviously, there's always some risk, but it's pretty clear how people are generating the returns on that.
Very cool. Let's jump for a minute on being an entrepreneur. I mean, obviously, you're a young guy. You started at 12. You're still a very young man. You've got this great business that's going and growing, and you've captured this moment of time intelligently, where we have this huge explosion. We all believe down the road. And what was it like building this company from the beginning? Was it really difficult? Did you scratch it on a napkin, and the first investor says yeah, or the first investor says you're crazy? How did that whole thing
Took a
transpire? And
while, yeah. Yeah. Look, I mean, I think from the time we scratched it on a napkin to paying client, maybe a year, maybe a little, maybe more than a little bit more than a year, something like that.
yeah,
And then that client ended up being our like seed investor. So it kind of worked out pretty well. And then we've done subsequent financing rounds since then. But yeah, I mean, it took quite a bit of time, I think, to get started on like actually having a real business and hiring a bunch of staff and everything. And so yeah, it definitely like would have been discouraging. Like I could have seen people just not being able to go through all that, not being able to go through, a year or two without a salary. It's difficult. I meet entrepreneurs now and they're like, okay, it's been 3 months and oh well, but we're gonna raise money right away and so on and so forth. And we're just like, okay, good luck. I hope it works out. But you really need a lot of grit, I would say, to get through that kind of first awkward stage.
was there ever a moment where you're like, man, this is not going to work out. I'm not going to make it. Or was it just the determination of, look, like the old sales back where I come from, is every no means you're just one step closer to yes? Or in your case, was it like, hey, um, I still need to eat. And the longer I go, the hungrier I'm getting?
Um, yeah, I mean, I think like before we raised the seed round, it definitely was. And it wasn't all easy from when we raised the seed round to now, but we kind of knew that we would be able to figure it out once we at least had like a couple committed clients in the beginning.
Yeah.
I think the biggest thing was getting that first client. Getting that first couple clients was like definitely harder than growing it since then.
Yeah, yeah.
Yeah.
And that's always the issue, that first anchor client, because once you have that, you can leverage that obviously to other potential clients. They see the traction. You've got a use case and a story, maybe a recommendation. It's easy to go. But yeah, they always say that the first million in revenue is the most difficult. The next 10 is a lot easier than that first. I don't know if you're having that, if you had that same experience, or maybe there's a big hurdle you had to come over, and then all of a sudden the traction was there and you started to skyrocket after that.
Yeah, I think that's true. I think the first million, the first couple customers, however you want to cut it, it's the hardest because you don't have that social proof. I mean,
Yeah,
it happened kind of slowly, but over the past couple of years, now we go to industry events. Most people have heard of us. Most people know who we are that are in the crypto trading industry. But it wasn't overnight. And then just having that social proof as we've been able to leverage it to
yeah.
attract more clients. But when we were starting, it was most people were like, what even is this thing? Like Bitcoin, isn't that for scammers?
Yeah,
it was
totally.
really a different world, right? And it was definitely interesting. Now at least you have the big banks coming in. It's you know people it's been legitimized, right? But in the beginning, it was not only were we a new business, but people thought that our whole
Industry, yeah.
industry was a scam, right? So it was definitely interesting.
Yeah, a scam, or a technology designed for international, drug lords or something like that, as we always
Yeah, I
hear
wasn't going to say
all
that,
the
but yeah.
time. I tell you, I love the name though, because the name's very simplistic and it actually makes sense. It really defines exactly what you're doing, right? You're creating the optimal pathway, the ultimate routes for trading of these coins. And so many times these companies come up with some name that's completely irrelevant, makes no sense whatsoever. But I found that you could connect that. Where did you guys come up with the name, and was that a big thing for you when you started out to get that credibility?
I think I did. I think it was my name or someone. I don't know. But yeah, I think we just did it. We thought, okay, and the name stuck. It's a pretty good name. But I mean, I think a lot of people in our industry went for like the Greek gods or some
Right,
weird
right.
name, but we wanted, people to know what we did. The only problem is in the UK, they think like coin rats or something, like because they would say coin roots and we say coin routes. So
Routes, right.
sometimes people think it's coin rats or roots or whatever, like
That
free
is
roots. But yeah, we like the name.
that is so funny. Do you find, because I know you're international, you're in Dubai, you've got offices in London, you've got stuff in the States. between Europe and the United States, do you find there's a different kind of sentiment, excitement around what's happening in crypto in general, or does it seem to be a consistent global phenomenon at this point?
Yeah, I mean, there's excitement, but I just think Europe, mainland Europe, I think the UK is a bit better. I just think mainland Europe has really done a lot of regulation that is going to come back to hurt them. I mean, we know a lot of people in mainland Europe that were running crypto funds and they've moved to Dubai or somewhere else, Singapore,
Yeah,
whatever. I think it's going to be a while, but look, I mean, there's definitely like the banks are doing kind of retail spot business, but there isn't the same institutionalized trading strategy type funds. There isn't as many, I would say, trading out of Europe as there once were. A lot of people have moved to other jurisdictions, especially with how crypto friendly the U.S. has gotten. I think the U.S. is
yeah.
really, I mean, everyone's excited. Even with the recent price action, people are extremely excited.
Yeah, I mean, I think the Trump organization is certainly bullish on it. You know, the whole thing around the stablecoin regulations that was just put out is very exciting. The passing of the ETFs, and I forget the exact number. What percentage of Congress actually hold or own some form of Bitcoin is pretty interesting because I tend
Mm.
to think if
Hmm.
most people in Congress own Bitcoin, they're probably going to lean positive in that direction. So I feel like there's going to be some good runway, at least under the Trump administration and hopefully thereafter.
Yeah, I think regardless of political affiliation, now it's such a big issue with young voters, crypto, that it doesn't make sense for any politician to be vehemently against crypto. I think the Democrats have realized that too. I think both parties now, regardless of what happens, are going to be more pro crypto just due to the demographics. I mean, you talk to Gen Z people, they own Dogecoin and whatever, like more. I've heard it more from them than like, oh, I bought, SPY or IBM or whatever. It's just more exciting, right? And so I think that's just such a huge constituency of the vote that the country is going to be more pro crypto now than it was under the Biden administration, no matter what. I also think there's definitely some more legislation that's getting passed. The Genius Act is supposed to pass
Sure.
in Q1. That's going to be, positive. And yeah, it's just looking pretty good for crypto in the U.S. in general.
Yeah, I think you're right on the young people. I've talked to so many people that are in their 20s, even 30s, and the idea of buying a bunch of bonds and sitting on them, whether it's a good or bad investment, it's just kind of boring. I look at some of my kids who are
Yeah.
they just let. I remember years ago, my son would be, hey, Dad, can I borrow some money? I want to buy this like gaming token or something. It's a sword, and I'm like. Why'd you spend money on that? Right. He's like, but then he's like, well, I can trade it for this and for that. And it's the whole idea, this whole concept of digital assets having value to a whole new group of people, where maybe an older generation they're focused on material things, and young people want to be able to buy and sell and trade things very quickly. They want to be able to do it on their phone, and they also want to be able to get in early. And that's the interesting thing about crypto. For all of its volatility, as you mentioned, there's more stable forms of crypto, and then there's kind of the shitcoin section. But people really want to be able to participate at an early age. They want to have to sit and save, hundreds of thousands of dollars and become accredited. The idea of, hey, I've got
Mm.
$200 and I want to make an investment in the future. I could do it from my phone through some type of tokenized asset. I think it's a kind of a psychological shift from generation to generation. It's really happening right now.
I think that makes a lot of sense, and you're right. They want to get in early. I think everyone wants to get in early. I think people are sick of the fact that these early companies are off limits to most investors, right? Because like if you look at the size of the private companies, people are staying private until $100 billion. That's crazy.
Yeah.
Like I mean, you
Yeah.
would know more than me, but that didn't used to happen. Companies would go IPO much earlier, and I think the crypto market is a big reset on that because now you have these small projects listing a coin, and Joe Schmo can go buy it, right? Whereas in the
Yeah.
public equity markets, that's not the case anymore.
Yeah, it's the same. I mean, by the time a company actually goes public, and an individual investor decides, "Oh, I'm going to buy a share of that stock," the big money has already been made. And what's so incredible at crypto is you have the ability to get in before the institutions even get in. And part of that is regulatory, but that is a real amazing opportunity for a 20-year-old can get in early on a deal before a major institution even comes into play. And as that evolves, maybe they can benefit that. That's something very, very unique that we've never seen before.
Yeah. Yeah, absolutely. I mean, there's still institutions, and that's part of the problem with the some of the regulations is some of probably there should be more disclosures, whatever. But probably the accredited investor rules as they stand now are a bit silly, and probably
Yeah,
some of these companies should be able to go public earlier. I mean, the cost to go public in the U.S. is just egregious right now for a company. You have to be
yeah.
so big to make it worth it, right?
Yeah, I was watching a podcast. They were talking about the percentage of companies over 100 million in revenue in the United States that are public, and it's something like 22% or something. It's so small. So, the
Yeah, that's
overwhelming
crazy.
majority of yeah, all the private equity out there is private. And no one could participate
Mm,
unless you're an institution. And that's where this idea of tokenization um, both at the individual private company level or even at the private equity level, ultimately could unleash this massive wave in the capital markets. And so I think something's going to have to change in that area because it's such a great opportunity. And as you just mentioned, so eloquently, it's so expensive to even consider going public, and Sarbanes-Oxley years and years ago added to that. And it's risky. It's risky too, for the financial management teams. And so I think a lot's going to, kind of morph over the next 10 to 15 years in that area.
yeah, I think it's going to change. I mean, in the last cycle, there were a lot of crypto companies that were going public in Canada. And because it was
Yeah,
just cheaper, the TSX Ventures Exchange. And it's crazy that as an American company, you have to go to Canada and file this paperwork, and it's still cheaper than just trying to go public in the US. And then some people can trade it from the US, but some people can't because some people are allowed. It's just extremely convoluted. And I do think that will change. I think that's going to be made a bit easier over the coming years for people to go public based on tokenization.
yeah. So as a young person, which I find you very young, what are you most excited about over the next 10 to 15 years?
Yeah, I think I'm excited from a capital markets perspective
Yeah,
of normal stocks being tradable 24/7 and of allowing some of these smaller businesses to access the public capital markets. I think there's still this kind of cabal of PE and venture capital firms that are able to access earlier stage deals. And if you're a really large, institutional investors, you can get access to those deals. But if you're a normal guy, there's no way you're going to get in. And so I think
yeah,
as tokenization evolves, this is basically a vehicle for normal everyday investors to be able to get in early in high growth companies, right? And so
for
really
sure.
democratizing access to that sort of upside, I think is interesting. And from what I can tell, like even in the '90s in the internet bubble, like companies were going public earlier. They were not $100 billion companies before they went public, right? That's kind of a
Oh
new
yeah.
thing. And so you've seen these companies just stay private for so much longer. And my hope is that trend reverses at least a little bit, and some of these companies are able to give their upside to everyday investors. And I think with tokenization, that's possible.
Yeah, yeah, I agree wholeheartedly on that one. So for CoinRoutes, where do you go from here? What's kind of the next big achievement you want to hit in 2026, let's say? And where do you think the company can go long term?
Yeah, I mean, look, we've been growing at a pretty good rate, internationally with offices in Dubai and London and US. I think we're still waiting for more regulatory clarity to see exactly how much what more we can do in the US market. But I think based on our platform and everything that we can do, we're going to continue to see pretty big growth, and we're going to grow with the market.
I know I think you've raised about 16 million in venture capital money at this point. Are you going to raise more capital in the future? So if there's a potential investor listening to this and says, wow, this is an amazing company, I'd like to learn a little bit more. Or do you guys feel you're tapped out right now and you're pretty good and you can go
Yeah,
to
no, I
cash
mean,
flow positive?
we're always, yeah, I mean, we are cash flow positive, but yeah, we're always looking to grow and kind of figure out what makes sense strategically and financially, for our investors and shareholders.
Okay. Very cool. So what is it like living in Dubai? It's this mystery place that we see on cool videos and TikTok videos, and there's Dubai chocolate has been the rage here in the United States from
Yeah,
every grocery store to Shake Shack's got the Dubai chocolate shake. And there's this mystery around Dubai, this magical city out there in the desert. What's it like living there?
it's cool. I think the coolest thing is that you can have anything delivered to your door in like 10 minutes. Like literally, whether it's groceries or like computer monitors. I remember like one day I forgot like some computer stuff and had it delivered and it was at the door in like 10 minutes. It's really insane. But yeah, just the access to everything like in immediately, like whether it's hiring people. I mean, I was on the phone with some guy And literally, he showed up to our office today with the visa and everything, and it took like
That
maybe
quickly?
3 days
Wow.
or something.
Wow.
Yeah, you can get like anyone into the country on a work visa like pretty quickly. I would say it's cool, but it should take about 2 weeks. But I mean, compare that to the U.S. or the U.K. or anywhere else, it's really difficult. So you can get pretty good global talent, and there's also pretty good local talent as well. So for building out our presence here, it's been pretty good. And then obviously the tax benefits and convenience,
Safety.
and I mean we actually
Safety,
have
I
a
hear.
safety. Yeah,
Yeah.
yeah, it's good. We like it. Yeah, yeah,
Yeah, we got
yeah.
the
It's
National
different.
Guard moving around to different places here in the United States. I hear Dubai is just the safest place, and it's just people are friendly and helpful, and like you said, you can do anything you wanna do.
Yeah, it's a good place to build a business now. I would say to grow a business.
That's awesome. Well, listen, if people wanna reach out or learn a little bit more about you guys, what's the best way to do that?
I'm pretty active on LinkedIn. It's Ian
Okay,
Weisberger
super.
on LinkedIn. That's my primary channel. Yeah.
And then www.coinroutes.com, I'd assume.
Dot.
Yep.
Yeah,
Yes.
coinroutes.com as well. Hmm.
Coinroutes.com. Perfect. Awesome. Well, Ian, thank you so much for staying up late or semi late to do a podcast in Dubai. I learned a lot. It's super exciting. Who knows? Maybe one day we can all be a whale and we can trade on CoinRoutes and get information Sunday night to see what's happening on these various exchanges and optimize our trading. Thank you so much for joining us today.
Thanks, Tim.
I appreciate it. Cheers. The Startup Innovators podcast is provided by MatchStar Venture Search. If you are interested in any of our executive roles or need help sourcing world-class talent for your company, check out our website at matchstar.com.